move around and manage ownership of money and different ledger systems. And so by the time that the reader gets to the Bitcoin section, at this point in the book, they firmly know that technology and the changing of technology has been so instrumental in how we've changed our money in the past. So it tries to kind of ease the reader into it. And of course, there's already a really big Bitcoin audience that'll read the book, and then they get a lot, I think, out of the first two thirds that they might not otherwise get in other Bitcoin books.
And I think it's very important because Bitcoin is an option, right? Bitcoin is something that I can choose to use, choose to save my money in. But the other system, the broken system, like you write, is the one that everybody is in.
Exactly. It's the biggest incumbent system, and it's funny when people talk about Bitcoin's complex. People will never understand it. It's like, well, you should see how complex the fiat system is at its core, and people use it without understanding it. And if anything, that's one of the downsides. That's why they're able to be on the wrong side of some of the things that go against them, whether it's debasement, whether it's censorship. There's not a lot of widespread understanding about how the system works. I think it's partially by design, and so the emphasis of the book is walking through the history of how we got here, and then how does the current system work. Because that I think gives the context for why Bitcoin's relevant. People always ask, what does Bitcoin solve? Or investors, I think, maybe focus a little bit too much on politics. They kind of assume
Mm-hmm.
that the president can control everything, whereas it's just one big piece among many others. But obviously, elections have outcomes, and so I'm monitoring right now some of the fiscal implications that it could have. Touching on the other aspects are generally outside of my focus because I focus on investment, so it's mainly the numbers that are relevant. So from a macro perspective, it's what are the likely spending or taxation changes that they're not going to do or that they're going to do? So, for example, there are certain tax cuts that were done in Trump's prior term that are set to automatically expire. And a Trump victory with a red sweep probably increases the odds that those get renewed or at least mostly renewed. We have to see what happens with tariffs. That's kind of a big unknown right now as to what extent they're going to be implemented versus just used as a negotiating tactic. And any sort of other legislation they might do that impacts the fiscal aspect. I generally am in the camp that the U.S. is going to run very large structural fiscal deficits kind of regardless of election outcomes,
Yeah.
and that these changes kind of affect the direction or around the margins where those deficits go was fairly small, where a handful of people, a handful of wealthy people, if they want to buy it, they end up moving the price.
Mm-hmm.
That there was liquidity limitations for what institutions could do with the asset. And so it kind of had to reach certain levels of adoption before it even gets on their radar in any serious way. And I think now we're entering that it's a large and liquid enough market that major institutions and then to some extent sovereigns can potentially view it as an asset that they could hold or that is of relevance to them, good or bad. There are some institutions that are like, kind of worried about it, and there are others that are like, hey, maybe this is something we can invest in now. It can be useful for us. So I do think that it's reaching that level where it's more in the conversation now. Another thing that I kind of point out is that even though Bitcoin has had multiple cycles of highs, like higher highs and higher lows along the way, most people didn't see the early ones. And most people don't look at the logarithmic Bitcoin price chart. And so for a lot of people, Bitcoin always looks like it's in a bubble or it's a broken bubble, layer of bigger centralization under it. And the problem is we kind of reached the end of the road there. Now we have very significant centralization. And the downsides of that centralization, the centralized nature of control, the centralized nature of breaking trust in terms of, say, sound money, for example. And with Bitcoin, we have the technology to do it in a more decentralized way again in the modern era.
There is Keynes gets a bad rep in circles of sound money advocates in Austrian economics, and much of that is probably deserved. I found a fascinating quote by him in the book Lords of Finance. You've probably read it about the time after the World War One, and from the perspective of central bankers, when gold was still orthodox, right? The gold standard was still an orthodox idea. And Keynes said, well, the problem with the gold is that we took the gold, we put it into cellars and into basement.
Quicker and cheaper with each other. And then for some people, using banks or third parties could be helpful. Maybe it's solving a problem for them. But it would be concerning if too much of it was in the hands of very few. If it all kind of gravitated toward BlackRock, that obviously wouldn't be great. Right now, the statistics of the network show that it's still pretty dispersed among whales, among kind of large entities around the
Hmm.
world that invested pretty early. And to the extent that more of it gets sucked into, BlackRock and their custodians or MicroStrategy and their custodians, that bids the price up pretty significantly, which then reduces their ability to keep acquiring more. So I'm pretty optimistic about its level of decentralization, but I don't think people should, rest on their laurels. I think it's a risk worth monitoring. And that's part of the reason I'm involved in the Bitcoin venture space. So I mean, I'm a general partner at Ego Death Capital, and we invest in companies that are trying to make Bitcoin faster, more around the world or online is part of what gives the store of value its capability in the first place, even if I'm not doing a lot of volume with that.
And it would mean, and this is something I do think about a lot, it would mean that we have a chance for like putting many billions of people who now are living in systems that are even brokener than ours, if that's even a word, right? We can put them on a hard money standard, and they could, get to work and actually get actual money for their work, and then transact that money. And basically, what we're talking about here is a completely new economic paradigm that the world has literally never seen before.
Yeah, and I spend part of each year in Egypt because I have family and friends there. In fact, I'll be there in a week again. Um, and the debasement rate there, I mean, the money supply grows at over 20% per year on average. So in the United States, it's averaged about 7% money supply growth. Obviously, the COVID era was a spike there. There are other periods that were a little slower, but about 7% per year. The numbers are often pretty similar in other developed countries, so much of Europe. Whereas in emerging markets, a kind of a high level awareness of harder money. So, if you look at central banks' holdings of gold, they were declining for decades in tonnage until 2009, and then they started going up again. Um, and in 2013, China stopped accumulating treasuries. They even
Mhm.
publicly said it's no longer in our best interest to keep putting our surplus savings into treasuries. They started doing their Belt and Road Initiative, so lending to commodity deposits or infrastructure. It's kind of their version of getting a little harder than just holding treasuries.
Mhm.
We started to see a shift toward more and more central banks repatriating their gold, whether it's Germany, whether it's India. A number of central banks kind of just pulling gold back. During the recent era of more rapid money printing, we saw an uptick in central bank gold buying. Um, and of course, as Bitcoin's grown to now being a well over $1 trillion, trillion euro asset, it's starting to enter the discussion at fairly high levels. Obviously, among individuals, it's been in the discussion for quite a while, but now that it's big and liquid, institutions and sovereigns can start talking about it. Now, as the U.S. is less of a uni power over the world than it was at the end of World War II. We're entering a more multipolar type of world.
Mhm.
The global GDP is more spread out. The U.S. used to be over 40% of global GDP. Now it's down to the 20s. And so I think that repatriation is natural. It creates a more decentralized world. And I think more and more entities will probably come along and say, if you can't beat them, join them. So whether that's major institutions like BlackRock, whether it's countries, and I think that happens as when Bitcoin's only $100 billion market and it's not very liquid, it's not really no one's really going to at that level jump into it. But when it's a multi-trillion dollar, trillion euro asset, as it's kind of entering that phase now, and it's been there for a few years off and on, that starts to become relevant for that scale. And I know in BlackRock's case, I mean, their head of digital assets has worked there for about it phase.
Mhm.
We're not actively building a sovereign wealth fund with Bitcoin. We haven't made it we haven't taken away the capital gains taxes yet. These are ideas that are being discussed. So we'll see to what extent we act in a tangible sense get on the Bitcoin train. Obviously, some of our institutions have, but whether the government will at size remains unclear. Merely getting out of its way is helpful. So basically saying, hey, if you want to mine Bitcoin, you can mine Bitcoin, make our energy cheaper.
Hmm.
That's already relevant and gaining benefits for people. But yeah, I do think that it's somewhat surprising that we haven't seen a number of other smaller or mid-sized countries get it because they can disproportionately benefit from it when they get it. And it's the same thing for corporations. Like, why haven't more corporations done what MicroStrategy's doing? Um, and it's I think a lot of entities are kind of asleep at the wheel.
Is it really like maybe is it really like the question of like, do you need persons at the right moment in time who actually like the former CEO of Souther.
And it can't even be useful at that level until it reaches that level of liquidity from the levels below it. And I think it's walking up those scales. And so it's becoming an option for more and more sizable entities, not just individuals, not just organizations, but now even some countries. Um, and by existing, it can change things because it's a new way of thinking, but it's also literally an operating software network that people can gravitate toward. And one thing I've kind of emphasized is that protocols tend to be very long lasting once they achieve dominance. So whether it's TCP/IP, whether it's Ethernet, whether it's simple mail transfer protocol, whether it's USB, generally when something becomes ubiquitous, or at least like it dominates its category, they tend to have very long lifetimes, and they can update in backward compatible ways to stay relevant with technology. So Ethernet gets faster, but it's still Ethernet. USB gets